Hi everybody. We'll get underway shortly. Just gonna let people join the event before I start my talk and kick things off. Just bear with us 30 seconds or so. So I think we'll get underway. Hi, welcome everybody. Welcome to our virtual Manchester conference. This is our postponed event. We were originally hoping to be hosted at the University of Manchester's wonderful Whitworth Hall in April. However, we're still thrilled to be able to bring the community together virtually today. So thank you everybody for joining the event. We've had over 300 people involved in this conference, this virtual conference. That includes people who've signed up and our speakers. And we've had some wonderful support from our sponsors and those in the community as well. So I just want to thank Marqeta for being our headline sponsors. Marqeta are a global card issuing platform, and they're based in Manchester. So we're really looking forward to hearing from Ian Johnson later on. He's going to be speaking about Marqeta and their role within the national ecosystem. Like I say, thank you to you for joining. You know, the community, you know, it needs engagement to continue thriving. So, you know, really glad that this conference has seen such good engagement so far. So I just thought I'd explain a little bit about FinTech North before we really get underway. So I'll share some slides with you to do just that. So yeah, just one more thank you quickly to Marqeta, to Ian, Mark, and the team there for their support with this one. Also to Verling for sponsoring our Manchester FinTech panel, which is taking place later on today. So let's move on to FinTech North quickly. I'll say a few words about FinTech North. So FinTech North is the focal point for FinTech in the Northern Powerhouse. It's a community of people who are interested in and work in FinTech. We've built that community through hosting events and bringing that community together. So since April 2016, we've hosted 63 events. That includes 8 full-day conferences, so 9 if you count today. 5 trade missions with the Department for International Trade as well. So we've hosted the UK bound leg of their international FinTech trade missions, showcasing, you know, the strength of the ecosystems here in the Northern Powerhouse. Let me just explain what the order is for today. You know, what we've expected. So I'm going to hand over to my director Julian in a second. He's going to explain a little bit around the future of FinTech North. We had a survey earlier on in the year, which has given us some really good insight from the community, and we're using that to shape our plans and development going forward. So that should be exciting. We'll hear from our chair, Chris Sier, on the evolution of UK FinTech. We're delighted to hear from Charlotte Crosswell as well, CEO of Innovate Finance. Charlotte's got a fantastic sector update for us. And we'll also hear from Professor Markos Zachariadis. He's going to speak around his professorship at the university and also some of his research. I mentioned Marqeta and Ian. Ian's going to be explaining a bit about Marqeta and the work they do in the ecosystem, and we'll then flow into a UK FinTech panel discussion. And of course, at that point, we encourage you to get involved and input into the discussion via the chat function as well. We'll be welcoming James Cliff, who's Managing Director at Refinitiv, to that discussion as well before going into a coffee break at 2:30. Everybody can grab themselves a refreshment then. And then we'll flow into our Manchester FinTech Showcase. So this is always one of the best parts of our conferences. We get to shine a light on the innovation that takes place regionally, showcase some exciting new startups, but also, you know, give a bit of profile to some other players in the ecosystem as well who are working on exciting development. So looking forward to that one as well. And after that one, we'll flow straight through into a FinTech in Manchester panel. That's sponsored by Verling. So thank you to Mark Robinson and the team at Verling for sponsoring us on that. That's, you know, again, that your support is crucial for us to continue doing the work that we do. And then we'll be closing the event off at that point. So yeah, I'll hand over now, I think, to Julian Wells. I'll be in the chat function if anybody wants to ask any questions to me about FinTech North or connect with me. Give me a shout. But yeah, really looking forward to today and excited to hear from everybody. So yeah, hope you all enjoy it.
Thanks, Joe. Hi, everybody. Yeah, as Joe says, Julian Wells. I'm director at FinTech North. I'm also director at Whitecap Consulting, along with White Label Crowdfunding. We co-created FinTech North in 2016. and that's and the last 4 years have been a really great journey to be involved in FinTech North. I just wanted to take a few minutes to just quickly reflect on how this has been, how 2020 has been for FinTech North as an organisation, and to update you on some of our plans for the future. And I guess, you know, in summary, we set FinTech North up to be a community group, as Joe's outlined. You know, our objectives are all around bringing together the FinTech community in the North, helping develop the FinTech community in the North, giving opportunities to FinTech entrepreneurs and people who've got developments in FinTech to share them, and to align to the national sector, which we're increasingly managing to do, as you'll hear quite a lot about that today. And we've always prided ourselves on values of being very professional, but also being very inclusive and collaborative and city agnostic. Although it's a Manchester conference today, FinTech North is a kind of northern organisation. We don't sort of sit loyal to any one location over another. This has obviously been a really challenging year to run an organisation like this. FinTech North is an events business, or has been an events business, and we've managed to build the organisation really based on sponsorship and goodwill over recent years. Never had any public sector funding or central funding. It's always been sponsor driven. In the absence of being able to host proper events this year, the way that we fund the business really fell off a cliff. You know, at points this year, we've been as much as 90% down in terms of the revenues coming in. It's made it very difficult. Joe is the first ever full-time employee of FinTech North as our engagement manager. He's had to spend quite a lot of the year on furlough because it was a necessity. But we've managed to find a way to run virtual events. We're very, very grateful to the people who've sponsored those events and supported them. And and here we are today having a conference where I've got around 300 people signed up. For the future, we have to look at things a little bit differently, because our model, and we kind of always knew that a model of single source of revenue was very difficult from sponsorship. We've been reflecting on how we run FinTech North and setting up our strategy for the future. And we also had a community survey, as Joe mentioned earlier. I think what we realized in that exercise is that although there are a lot of options with what you could do with something like FinTech North at the phase we've brought it to, in terms of making it a more commercial organization, for example, fundamentally the reason people like FinTech North is because of the way we set it up as an inclusive, open organization that has an open platform that people can use, and so we want to keep it that way. We've discounted things like charging people to be members of FinTech North. We just don't think that aligns with the values that we have for the organisation. We will be rolling out sort of various new initiatives for the new year, an events program, opportunities for people to get involved, to support FinTech North either on an event by event basis or to become annual supporters as organisations if they would like to. We're going to be announcing some partnerships as well around the way we'll link with other organisations who've got relevant products and services to FinTech North. But fundamentally, we've built a community, and we acknowledge we've built a community, and from the feedback that everyone's given us, we know what's important to that community as well. So really, the purpose of me having a few minutes now is to say that FinTech North has survived 2020. We've learned a lot along the way. We're setting out our stall for the future. There are many exciting things going on in FinTech in the UK, which we want to be part of and keep the North, very much at the forefront of these things. And we'll be making some announcements over the coming weeks to flesh some of these things out a bit more. Hope you all enjoy the day. And at this point, I'm gonna hand over to Chris. Chris, just before I do, I just want to say big thanks to Joe for everything he's done to get today ready. Joe's he's the engine of this organisation, and the fact that this is happening today is down to his efforts. Chris, I just want to introduce you as the chair of FinTech North and Treasury FinTech Envoy. And throughout COVID, Chris has also given us his unwavering support, as he always does. And we're always very grateful for your input and your support, Chris. And great to now introduce you and hand over the mic, so to speak. And
thanks, Julian.
Thank you.
Yeah, no worries. It's slightly odd to be chairing a conference from my own living room. What it means is that actually, for once, I might even get a cup of tea delivered to me on stage, so to speak, which is a slightly unusual phenomenon. But yeah, and again, to iterate what Julian said, thank you, Joe, for keeping the faith with FinTech North. The challenge has always been, how have we been able to fund ourselves? How have we been able to do what we do with no funding, with just vocational help, and then bringing Joe on board and offering him a job and him being a full-time employee, and then the bottom dropping out of our funding model and our revenue model, which was sponsorship at events, meant that Joe at some point had to go on furlough, and he still kept helping us and working us in good faith that this would come through in the end, as would find a viable model. So Joe, I can only iterate our thanks and say that, you know, from where I'm sitting and from what I know now, where the UK is going in the kind of strategic review of FinTech, the future looks pretty bright for FinTech North. So I'm going to be looking forward to working with you for a long time coming. So on that note, and in terms of the FinTech review, it's probably a very good place to start. And for those of you that don't know what the FinTech review is, the government instituted a strategic review. It's called the FinTech Strategic Review, chaired by Ron Khalifa, of the FinTech sector in the UK, with a specific remit to understand not just the purpose of London in the realm of FinTech, but what the regions, what role the regions can play in FinTech. And obviously this with FinTech North, and then the evolution afterwards of FinTech Scotland, FinTech Northern Ireland, and FinTech Wales, FinTech West, it's become obvious that there is a demand from outside of London to be recognised, to be supported, to be helped. And this is something that we've always understood at FinTech North. It's always been understood as the role of the FinTech envoys to promote that. But trying to get the ear of the Treasury and the government with their, the extremity of the competing demands that they have has always been difficult. So when the FinTech Strategic Review was announced, it was with a sense of, finally, great relief and great expectation about what it would achieve. And I have to say, it hasn't disappointed. So the model is the FinTech Strategic Review was split into a number of work streams. And the work stream in which I've had most input has been the National Connectivity Chapter, which has now become known as, you'll be pleased to hear, the Levelling Up Agenda. Now, I understand that there may be some cynicism around this, which says, of course, in an environment where there is a political agenda about working with the North of England specifically from the government, my answer is I don't care, so long as we get our fair share, and so long as we get the attention that we deserve, the support we deserve, and have the ability to contribute to the greater entity that is the UK, and to work specifically collaboratively with the other regions. I've always maintained that it is very counterproductive for us either to compete with other regions head to head, or even internally to compete with ourselves, city to city, local authority to local authority. It makes no sense whatsoever. We should be looking for and actively seeking a model where we all are good at something, we all are supported and respected for doing something. We don't try and cut each other's grass too much, and as a consequence, we are all successful and add to the greater entity that is the United Kingdom. And that is what the FinTech Strategic Review is aiming to achieve. Now, the status of the review is that the recommendations will be written up over the next month or so, with a report being signed off and delivered to the Cabinet Office, I believe, and Charlotte, you can correct me on that when you speak shortly, to the Cabinet Office in due course. But we're at the stage now where we have reached a set of relatively stable recommendations after a period of in-depth analysis. And Whitecap Consulting, I'm very glad to say, and their regional reviews, the regional reports that they've produced, which have been of extremely high quality, have played a very strong role in inputting into that sort of ecosystem review. Now, to give you an idea of what the ecosystem review has delivered, it's been delivered by Deloitte, and Deloitte have taken as many input and data input sources as they possibly can over what is quite a long time period. I believe it's around 10 years. And they have tracked the growth of fintech and innovation clusters in the UK. And the good news is that whilst London has always been seen as the super hub, and quite rightly so, three secondary but powerful hubs have been identified that have evolved over time. And this makes it very clear where if some funding or some incremental support will be supplied, it should at least start with those hubs, because the building blocks for what is needed to build the national ecosystem will exist within those hubs. And one of those hubs is here in the north of England. It is Manchester, Leeds, Liverpool. It is that stretch across the Pennines, which encompasses what we do at FinTech North. There are less significant, but nevertheless important, but less significant hubs that have emerged in places like Newcastle, Northern Ireland, the west of England, around Bristol. But actually, beyond London, the three primary zones are this north of England hub, the West Midlands around Birmingham, and Scotland. And the primary among those is the north of England. So having identified these regions as having all of the potential already to foster and develop all of the capabilities that are needed in the realm of fintech, this review then started to focus on what those things were good at. And what was clearly identified, rather pleasingly, through this empirical process, through this quantitative process, was the fact that the Manchester, Leeds, Liverpool zone is very clearly strong at lending, regtech, and business banking. As it happens, the same things sort of apply to Birmingham and Scotland, although wealth tech was identified and open banking for Scotland as well. But lending, regtech, and business banking were the ones that we always knew we were good at. And this has now been clearly highlighted through a very, very thorough quantitative and AI-supported analysis of the UK fintech ecosystem. So that's fantastic. We have the building blocks. We've been identified as such. We will be presented into the government and Treasury as such. And it's also helped foster the recommendations that come out of that analysis. The first is, if you're going to support a fintech ecosystem, play to your strengths, identify them and play to your strengths. And clearly, that is exactly what the review has done. It's what we're going to achieve. The fact that we have, in a self-selected way, created FinTech North to cover that cluster, FinTech West to cover the west of England, FinTech Scotland, FinTech Northern Ireland, clearly shows that the regions understand what their capabilities are. But now we have it as a proven fact, and we have to start building our strategy around those things that we're good at in the regions that we're good at them. The second is there will be some funding available. Now, the shape and size and quantum of that and the direction of that funding has not yet been clearly iterated, but the government is intent on ensuring that money is available for fostering the development of these. But finally, and probably for me the most important part, is how do you knit it all together into something coherent, something whole? And for me, the most important point is there will be some form of overarching communications mechanism or mechanism to coordinate the equitable distribution and equitable understanding of all those different regions. So that's where we sit with the FinTech Strategic Review at the moment. It is a significant piece of work. As I say, when it came down to looking at the analysis that was carried out by Deloitte, the reports that have been generated on the regions, obviously we have at least 2 or 3 within the region, the north of England, that have been generated by Whitecap. Those were fundamental to representing the current state of affairs. And I know Julian and the team have been giving considerable input into the Deloitte team to help them refine their understanding of what the current state of play is. But this has been a time series piece of work and is very interesting, therefore. So as I say, these things will be completed, written up, and the report submitted to the government by Ron at some point towards the end of December, with the aim to have the full recommendations implemented by Q1 or the end of Q1 next year. And I don't think I'm saying anything that's incorrect there. And again, Charlotte knows as much as I do, and if I've misspoken, then she can correct me. I'm used to that happening. But what I will say is I want to reflect a little bit on the state of the market at the moment in the UK, and the state of the problems that we have in the UK with COVID and the virtualization of the fintech environment, because that is a very pressing state of affairs. I imagine that we have quite a lot of people in the audience today who are on the cusp of building something and maybe even wondering whether they should get started, or they're in the process of trying to raise money, or they're struggling with their business model in one shape or other. And what I want to do is offer a message of hope to those people, to those organizations, and say that actually doing business in the current environment is perfectly possible, and winning money is perfectly possible. And I'm going to use myself as the example there, because the company that I've started, the startup that I've started, has been going through the process of raising money from VCs for almost the entirety of lockdown and the time beyond, all the way up till now. And we're just about to sign the deal. And that virtualization, we were told at the beginning of that process that no one has ever raised money over Zoom. No one has ever closed a deal over a video call. VCs have a penchant for pressing flesh. They want to shake hands, they want to see you, they want to trust you. And actually, it is possible to build that trust virtually. And the reason why I'm telling you this, and the reason why I'm saying it's significant, is that one of the issues and challenges that we have always had outside of London is attracting funding to come and see us in a way that means that we don't have this sort of time-expensive, time-intensive process of traveling down to London to meet with a group of VCs. In other words, how do we get the money to come to us, and how do we find the funding to support growth, either at seed or Series A or beyond, for companies outside of the super hub that is London and in the regions? And actually, COVID has led the way. If you can raise money with international VCs virtually from anywhere in the UK, it should entirely be possible for us to build a framework for us to meet and congregate with and join and build trust with VCs wherever we are. So in many ways, the COVID crisis has played to us, it's played to us being able to demonstrate to VCs that actually we can win their trust and win their money virtually. So in other words, this issue of the funding never comes to the north of England has disappeared. It's disappeared because VCs have now extended their beliefs that actually it is possible to find people virtually, and that is what's happening. So if you're on the cusp of raising money, if you are thinking about raising money or starting a company right now, don't be disheartened. The money is there. A lot of VCs have a lot of dry powder currently. A lot of VCs are still raising money from investors, so that they are looking for LPs to fund or put money into their funds. Some have raised funds not just prior to the start of COVID, but during COVID, and so they have money to deploy. They just need to find the opportunities. So if you haven't had the chance to go out there and pitch at the many pitching events, if you haven't had the chance to talk to VCs directly and you want to get some ideas, please come and talk to me. Drop me a note and I will signpost you to where we found the VCs when we were looking for them. And they are there, and the money is available, and it is winnable despite the rather virtual nature of the environment. So what I'm going to leave it there. I'm going to leave it there for the moment and introduce you to our next speaker. But we've got a very interesting day today. We've got a couple of panels. One is focusing on the national picture, and hopefully we'll be able to go into some more detail through the discussion and after Charlotte and Markos' speech about the sort of national framework for fintech. We'll hear some of the companies, obviously, through the showcase, and please do feel free to post questions. And again, Joe, is it possible for people, and what's the format for people to ask questions should they want to?
So people can ask questions, Chris. It's a good question from you. Thanks for that. Just by the chat function, the Q&A box along the bottom. So yeah.
Okay, so we will see it here. By the way, if anyone wants to ask me a question now, I've actually got 5 minutes free. I'm happy to answer questions. And then at the end, we're going to focus in on the Manchester ecosystem, which I think has been identified as probably the most vibrant of the individual citywide ecosystems or regional ecosystems in the country. And so, London and Manchester and its kind of environ, which would include Leeds and Liverpool. Manchester is obviously extremely strong, and we're going to focus in on that at the end of the day, and how it is supporting its network of startups and the incubation environment. But if anybody wants to drop me a question now, please feel free. Julian, I've pitched in with some recommendations and so on that I only just received about 20 minutes before I started speaking, so I had a chance to read them. Is there anything you want to ask me about some of the recommendations as I have them in front of me right now?
Well, it's great to get them hot off the press. I think
Yeah.
I think it's
I hope I've summarized them correctly.
well, we'll find out, won't we, when they come out. I think it's a big positive for FinTech North and all the regional ecosystems that you've been able to be so close to it, and that the review has taken a national view and has involved a lot of people from around the UK. I think it's really important that we get that national picture.
What's interesting is, one of the interesting findings for me is that what they say is that there's almost a center of gravity that's developed, and the center of gravity helps or helps build all of the infrastructure that's needed to get a startup, to get a sort of fintech startup going. And so there are sort of three big centers of gravity outside London, and one is this kind of Leeds Manchester band. And I think the implication is that it's not just those cities that benefit. It's because you are local to those two hubs, even if you start somewhere which is a little bit fringe to those two big cities, you still are part of that, if you like, that gravitational pull. Yeah. And so there are opportunities within those regions for some of the smaller towns and cities in those regions to also play their part. And I really like that idea of this kind of gravitational pull, because it means that the resources are available to more than just the two cities, or Liverpool, Manchester and Leeds. It's all of the kind of the region around there as well. And I find that immensely appealing because it's far more equitable than just things happening within Leeds city centre, for example.
Yeah, I think it's important as well to remember that although those areas have been identified as focal points, that there's actually a really vibrant fintech ecosystem in the northeast as well, for example.
Yep.
There are going to be, although the report might pull out the main focal points, there are fintech ecosystems all over that are evolving and developing, and a lot of time and effort's being put into them, and some fascinating companies in all those regions as well.
So it's interesting, you talk about up in the northeast, so the kind of Newcastle, Tyne region, it hasn't quite got, if you like, the volume of startups, the volume of support, but it was clearly identified as having a banking and operational, across all sub-industries, an operational component. So they have strengths in terms of supplying outsourced operations and in terms of the banking industry. That was clearly identified. It just didn't have the same, if you like, sort of gravitational pull that the three super hubs had: Manchester and Leeds, Birmingham and Scotland, basically. But nevertheless, it exists, and it is one of the nine. Nine have been identified. So the Reading area, Cambridge, Newcastle and Durham, Bristol, Northern Ireland, Wales, and then Scotland, Birmingham, Manchester, Leeds and London. So it is identified as one of the 9 primary hubs. So yeah, absolutely. And it's part of our community.
Yeah, well, it definitely is. Yeah, and everyone talks about Atom Bank. There's other companies up there as well. There were 3 of the northeast companies going through the Tech Nation cohort last year. There's GB Bank, which is making quite a bit of noise these days as well.
And by the way, the things like the Tech Nation cohort, I mean, we talk about that as that's a kind of a national horizontal capability that cuts across all regions. It's things like that in the virtual environment that make it so easy for people to operate in that virtual world and meet investors, because they have carried on, rather like the one which we used, which is Founders Factory. They've operated despite lockdown, despite only operating virtually, and have given access to the kind of events and opportunities that would only have existed physically previously. So if you wanted to pitch, you had to go along to a physical pitching event. Now you can do it virtually, and it's facilitated by them with the same VCs. So I would urge people to get involved with that kind of capability as well. It certainly has brought another dimension to our ability to reach out to VCs from my own personal perspective. Right, so now I'm going to hand over to Charlotte now, because I think it's going to be great to hear now a far more national and perhaps international view from Charlotte, who is the Chief Executive, and that's it, there she is, Chief Executive of Innovate Finance. I've known Charlotte for some time. Innovate Finance has been around for a very long time. And just to give you a perspective of Innovate Finance's, I think, primacy in this space, of all of the pieces of infrastructure, of all the networks I know, the one national or international network that has recognized pretty quickly that the regional conversation that we've had with both the envoys and with the various fintech hubs was important, was Innovate Finance. And so they created the FinTech National Network. So Peter Cunane, who works with Charlotte, has been chairing the FinTech National Network, which brings or convenes all of those regional hubs underneath one group, has been fundamental in helping get this FinTech strategic review underway. So Charlotte, thank you for that, and I'm looking forward to hearing what you have to say.
Oh, thanks, Chris. I like to think I'm in Manchester. This is about as close as I can get to it, but I've tried my very best.
I like it. Very good.
Sorry, I'm not there, but nobody's in the centre anyway, so that's fine. Right, I'm going to try and share my screen. I've just got a few slides to go through. I'll talk a little bit about the review, Chris, as well, just on a couple of your points there. Because we are supporting the national stream of that as Secretariat with Ron, and I sit on the governance board with Ron as well as others. So we'll just sort of give you a latest and greatest on that. I think about 300 people have been involved across the different streams. So hopefully everyone has had their voice heard or inputted if they can. Thanks very much to the FinTech North team for today. I know how much work goes into this. Every event people see and think it's just a matter of dialing in. It's not as simple as that. You've done such a great job, and Julian, just some great points of just how tough it is at the moment for many firms. And like you, other firms have gone through some incredible difficulties this year, have pivoted, have had to change, put staff on furlough. Joe, great to have you back. But certainly, we see the same as an industry body. We have never, ever been busier than in our existence of 6 years. But guess what? You're doing it on a reduced staff because you're trying to save your costs, and some of the members are struggling to pay. So it's always a challenge. I'm with you, and I think we've all doubled our workload, but unfortunately haven't doubled the team behind it. But I think we've achieved some great things this year. I think the sector continues to do incredibly well. As you said, Chris, the regional piece of this is absolutely crucial, and it is an equaliser. For all I know, you're at the end of my road. I don't know where you are, and that's the same with investors, the same with government and regulators. And how crazy are we to think that we used to have to fly off to Singapore to the Singapore FinTech Festival when any of us can land in there in the next few weeks, probably about 3 inches from where I'm sat now. So I'm going to try and share my screen. Let's hope this is going to work. I've had a few problems with my internet. Despite being based in London, it doesn't make any difference to my internet. And just to clarify, because one of my team said this morning, just for the record, I'm not doing karaoke here. The team put in some photo of me speaking last year, but they've now decided to make a joke that I look like I'm doing the karaoke machine. So I thought I'd just take you through just where we are in the ecosystem. And I always had this great analogy, I thought, of calling fintech in the UK a bit like the British Airways flight map. Unfortunately, maybe the fintech ecosystem in the UK is potentially stronger than the British Airways flight map at the moment. But hopefully you get the concept that wherever you are in the world in fintech, everyone is connected to that via the UK in some guise, whether that's the banks, whether that's investors, the government, the regulators, the bridges. The UK is seen to be one of the global thought leaders. We may not have the most unicorns. Yes, the US is going to have more, but per capita we do. In China, in the last quarter, they haven't raised a single VC investment for any fintech. And as many of you will have seen with the anti-IPO being pulled, that's entering quite a challenging phase. So yes, there are markets that are bigger than the UK, but the UK is incredibly important on the global stage. If you look at the regulators, we've seen the first regulatory sandbox coming from here, but now we've seen the digital sandbox being launched. We've seen the GFIN network, co-hosted and chaired by the UK FCA, has started from the UK and pulled in the regulators from around the world. The Financial Innovation Partnership with the US is part of some of the trade talks there. Again, what comes up all the time is the fintech sector. And to Chris's point, this isn't just about London. This is the network across the UK as well. I know full well that there's trade missions that happen without me knowing about them. They go straight to the north. They go straight to Manchester, Northern Ireland, Wales, etc. So just the pull of that network, wherever you are in the UK, is setting some of the standards. As this crisis goes on and people get used to working from home, that becomes even easier to spread out. When I talk about connectivity across the UK, my concept of that, and I'll be feeding this into the review, is really about wherever you are in the UK, it shouldn't make any difference. You should have access to the same network of investors, of regulators, of governments, of fintech hubs around the world. You should be getting the same knowledge about skills and talent. You should be able to input like we did in the review. You should be sitting there, being invited onto the same trade missions. And I think we're getting there. This crisis may have helped that. On the human side, it's incredibly tragic. On the business side, we are seeing the greatest move to digital transformation that I've ever seen. And I was one of the ones who got one of the first mobile phones. So I like to think I've been around the tech scene for some time. And suddenly we are seeing a rush. This isn't firms bringing their transformation, their digitization agenda on hold. This is them ramping it up, not just the banks, the asset managers, the insurers, and everybody in between. It's estimated 6 million adults downloaded a banking app for the first time during the crisis. That's 12% of the working adult population. A lot of that's been the elderly. So it's not just the millennials and Gen Zs and Gen Alphas coming in behind them that are driving through change. We're also seeing this need for digitization from all aspects of society. And yes, there's still things we need to resolve, like access to cash, like knowledge, like internet. But we are well on the way. And I am therefore very bullish on what the sector's role is in the plays in economic recovery. So just talking about what it actually gives back, and as you said, thanks to Whitecap for all of the information you've been giving into the review. I know it's extensive, and it's just been great to have those reports available and that in-depth detail to feed into that national work stream. It's so incredibly important. I think we all know that the Economic Secretary to the Treasury, John Glenn, always talks about the UK as a whole. He talks a lot around the regional opportunity here. When we look at skills and talent, everyone knows that talent is coming from across UK universities. It's not coming from London, and it's also coming from overseas. So it is there is a democratization of talent, of skills, just like the fintech sector gives democratization of access to financial services products. So some just incredibly exciting things happening here. And again, we're not seeing that slowing down at all. In terms of investment figures, and I touched on the impact of China and what that's going to mean here, again, we see an incredible interest from overseas investors into the UK fintech scene. They recognise innovation, incubation is happening here, but also scaling up. And when you look at this graph, the pink line is the number of deals. You'll see that's trending downwards. That's no huge surprise because in a period of fragmentation that you see in any new technology initiative, you will always see a period of consolidation and a period of scaling up coming after that. So as fintechs understand their niche, they're starting to grow, they're starting to scale up. We have 8 fintech unicorns now in the UK and significant pipeline following them. They are able to command some very large sized checks. And maybe that's leading to less fintechs now incorporating, and we're seeing that in companies' house data, but certainly the size of checks is going up. And numbers are flat on last year, which, considering the year we've had, is quite incredible. You could argue that some of those are deals that started before the crisis and they were well in train. And we saw some fintechs get incredibly lucky with timing. We saw others that had initiated conversations with investors and were able to complete them by Zoom. To Chris's point, we're starting to see new deals come through that have initiated conversations and they've never met an investor. And who would have thought that would have happened? If somebody had said that 12 months ago, I think probably most VCs would have laughed from out the room. so the £200 cup of coffee that I always like to use, is just incredibly important to understand that you do not need to get on a train or a plane anymore to secure this investment. My phone, which I can't stop. So looking at the cash runway, though, that just shows you where we are, where we're looking over the cash runway for some of our fintech firms. When we look at smaller firms, they certainly have struggled for that cash runway, and there is concern. Now, obviously, this is a moment of time. We took this just before the summer. It doesn't mean they didn't go ahead and get that investment secured, but it was a great early alert to us to say the large majority of firms were going to run out of cash the longer this crisis went on. We are starting to see, though, that pick up now of deals there, and I'd like to rerun this data towards the end of the year, beginning of next year, to see how that's changed. And certainly, as I said, that was affecting firms, particularly pre-Series A, who didn't have a VC in place. And again, looking at the government initiatives, the Future Fund, again, was more challenged for firms who didn't have a VC in place already and couldn't get access to any of the other government schemes. And that's some of the work we've been doing over the last few months with government and inputting into that, is looking at that. And you see that last one at the bottom, the majority of fintechs were not receiving government help. That's because they weren't eligible for a CBILS loan. They maybe couldn't get a bounce back loan for various reasons, or it just wasn't enough. As we know, the burn rate is quite high if it's a regulated fintech business. And we've really been raising that. So not everyone was covered by Future Fund, not everyone was covered by CBILS and bounce backs, and that has given a squeeze on liquidity. As a result of that, we worked with the Scale Up Institute in the summer on looking at the future of growth capital, which is a significant report. I do urge you to take a look at that. If you search by that report, you'll find it. And that wasn't just for fintech, that was for the wider growth capital sector, so particularly for tech, but also for culture and fast growing businesses, is saying we already had a growth capital gap pre-crisis, and guess what? It doubled during the crisis there. So as there was a lot of focus around recapitalisation and some of the bad loans that potentially were going to hit the government and the banks, we wanted to impress that there was also this equity capital gap as well. And suddenly those pieces of work started merging together, as some of the recapitalisation work also talked about the role of equity in some of these businesses. So approximately 2/3 of businesses and SMEs that took out loans during the crisis was first-time debt. So what we have is people taking on, and businesses taking on first-time debt, potentially not knowing really how to manage that debt, and is there a role of equity there? And that really led us on to our work also on lobbying for access to term funding schemes, but also just looking at the wholesale funding pipeline for non-bank lenders. We have done an incredible amount of work, and my team takes credit for that, and just on how we can raise the profile of non-bank lenders, of peer-to-peer lenders, and the fact they didn't have the equal access and able to distribute the loans to SMEs. At the beginning, that was centered around the banks. I have to give credit to the British Business Bank for quickly onboarding them to become accredited lenders if they wanted to, but that's still given a slightly different issue, because the banks, obviously with access to term funding, were able to distribute those in depth, and certainly the bounce back loans, the interest rate being set at 2.5%, set a real challenge for non-bank lenders. They just couldn't get the wholesale funding at that level to make that number work. That wasn't their own fault. They never signed up for the business to be able to lend at 2.5%, and that still remains an issue. There has been a loan succession programme been announced by the Chancellor, which is new for January. This was before CBILS got extended, so we'll see if that's going to go live in time, which we've been inputting into heavily. If you are a non-bank lender and want to find out more about our work on that, more than happy. But I think we had about 40 non-bank lenders feeding into our initial work on that. We've been spending a lot of time looking at what that looks like. So that's a whistle-stop tour on just some of the work. A couple of other things that I was keen to talk about was also around a launch that's coming up next week that I'm very excited about, called FinTech for Schools. And many of the national network have been involved in that, and thanks for your help. So we recognise that our need for skills and talent pipeline is one of the things that's going to fuel this sector. And we wanted to inspire young people to consider it as a career, to really just shine a light on what FinTech is and what it does, and also the role of technology in helping people's understanding of financial wellness. 70% of young people get their financial understanding from their parents, and that's great if their parents are able to give them that financial understanding. It's not great if they aren't. And so what we see is quite a disparity between children coming out of school with very little financial knowledge. So FinTech for Schools is about showing that, it's showing what FinTech does, helping people to understand some of the apps that are out there to help them understand how to manage their money and what the role of FinTech is. It's rare, and for anyone who has children, I've got a near teenager, it's rare that you find someone who doesn't want to spend time on their phone. So I do urge you to keep an eye out for that launch and say that screen time can be increased if you can have a look at that, and do try to inspire them on the role of entrepreneurship, on the role of FinTech, but also the importance of financial wellness as well. Another thing we've been working on is BBC Storyworks. There's been an Innovation in Finance series, which we partnered with BBC Storyworks over the last 2 years. I think it's been a project. That final film in that series just went live a couple of weeks ago. Again, if you haven't seen that, do take a look. BBC Innovation in Finance. And that was just great, just to make people understand what FinTech is, but also what it does. A lot of people think it's for people, I have friends who don't even know what FinTech is. It's not a word, it doesn't really have to be a really funky word, but it actually powers everything we do within financial services now, and what the role of innovation is. So really excited about that piece of work, and we've been able to profile some amazing firms who've worked with Storyworks to develop their own films within the series as well. So really excited on that. And then I shall finish off on the review. So just one thing on Chris, it's going into Treasury, not the Cabinet Office, but trust me, we'll send it into everybody, don't worry.
I think they'll all see it, won't they? So.
And and I was on a call with Ron Khalifa yesterday. We were talking about tech IPOs, and I can guarantee you, I think it was every government department was on that, and actually Ron did give a chance to give a brief update on that. We've been looking about the competitiveness of the UK in scaling, but also all the way through to tech IPOs. So how do we keep the companies all the way up and support them? And obviously, as we know, there's some great FinTech firms wanting to IPO over the next few years. So I've been asked to lead a piece of work on that. So we were talking about how that's related to the FSR. There are significant amounts of recommendations coming through to that review. I get to just see the culmination of those and the end of it, and sitting on many calls with Ron and Treasury as well. And it's an exciting piece of work. Corporations on the board. You're very aware that Al Lukey's sitting on the governance board as well. But it's really about the input that's gone into it, and for everyone who's inputted, thank you. We were always really keen that this represented the whole of the UK, the subsectors that are really exciting, but also gave us the opportunity to show to government, to regulators, but also the outside world, that FinTech in the UK is something that's powering innovation in financial services. It's not just the FinTechs themselves, it's actually changing. And being able to do that review at the end of, or towards the end of this crisis, or post the first phase of the crisis, has been a really good time. If we'd done it a year ago, I have a real fear that maybe have been put aside and we would have focused on something else. But actually what we've done is look at it in the guise of economic recovery, in the guise of levelling up and connectivity, and hopefully driving that forward. There is strain on government money, I think, at the moment. So I'm sure we will be joining a long list of what needs to be done, but just the focus alone and the input into that, and all the work being done by the relevant consulting firms, and again, Whitecap, thank you, has been so important. So now we're into drafting. I'm trying to stay away from the work streams as much as I can, because it's far too much like hard work. But the idea is to try to get that wrapped up and out probably just after Christmas, so in January, just because there is a spring budget, and I think Ron is keen that we get that in plenty of time.
I heard they were going to have it done before Christmas to give civil servants the opportunity to consider it over Christmas, but it's the same thing. They're aiming for the spring budget.
It's getting tight, but certainly what it is, like any review, is some things get accelerated as well. You would have seen the listing rules consultation get announced on Monday by the Chancellor. Again, that's something that Ron had been discussing through this. A lot of people have fed into that as well, and that's really ramping up at the moment. So obviously this one gets accelerated, some other pieces as well. So I know he's keen to get it done. I think it's many hours of his day, and thanks to him for doing it, because you do reviews and you think it's easy to say yes, but my goodness me, has he worked hard on it.
I know. Well, if there's one sector that is ripe for digitization, and actually it's appropriate that it's digitized, certainly with the financial inclusion aspects and open banking, then it has to be the finance sector.
Yeah.
So actually, if nothing else, then you could say the COVID crisis has just precipitated a move towards a digital environment, and so it's entirely appropriate that we focus on how to stimulate that environment further through measures the government may have to help fintechs wherever they may be, but obviously in the kind of the regional way they've been thinking about it. But I have one question for you before I hand over to Markos, Charlotte, because thank you very much indeed for sharing that with us. And I think that your perspective with the kind of international flavor, talking about the kind of the macro global environment, and informing us that actually we're not so bad off here compared to some other bigger hubs. I mean, I can testify to that. I mean, picking up funding it was hard, but it just took longer, because you tend to sort of mull over a video conversation where you can make an instant assessment of someone face to face. But the question I had is, I'm very interested in this BBC thing, because I saw an announcement of it on LinkedIn, as I usually do, and then on Twitter, and then every other place, because your social media team is obviously very, very, very proactive. Whereabouts is it? Is it on the BBC iPlayer, or is it on a particular channel?
You come through our website. So if you put Innovate Finance, Innovation and Finance series, point you through, and then that will link you back through. Okay,
cool. Right. So you just go to the Innovate Finance platform.
BBC Story Works, and you'll come up. And
brilliant. How many episodes are there, if that's the correct expression?
But there's one longer film. That's the one that because that's the one that got delayed because we were filming it. So we were all sneaking around somewhere a couple of months ago trying to do that. Being told remotely how to wire myself up to everything.
Yeah, I was going to say, you have to learn a lot of new skills virtually.
Yeah, exactly.
Anyway.
But yeah, so that's the longer 30 minutes are really there. But what some firms opted to do, they were all contacted by BBC, was also that they could then produce their own ones. So they then engaged directly with BBC Storyworks to do their own. So if you keep an eye on the whole series, it's all in that same place on our website.
Brilliant, perfect.
You'll see what's been brought to you by MasterCard, what's been brought to you by Deloitte, and they've actually sponsored their own ones as well. So overall, it's a great one. And somebody said to me, just send it out to your kids. Show to young individuals.
Perfect.
I challenge you to send it out to the university, just to demystify what fintech is.
Well, do you know what I can do? So I'm working with 3 universities, and we've got our next speaker with Manchester as well is going to, I would suggest showing it to your students. So on that note,
there's my segue to you.
Charlotte, thank you very much indeed. We'll see you again shortly for the panel. And now it's my pleasure to move from me as a token academic, with my sort of honorary roles, to somebody who does it for a living and is a professional researcher and educator, Markos. So thank you very much for joining us. Markos is the Green Sill Chair of FinTech and Information Systems at the Manchester Business School. And can I just ask you a question? I know, having worked with academics for many, many years, every academic has a favorite subject, and FinTech is a broad church, right? So what's your favorite piece? Do you look at cryptocurrencies? Do you look at payments? Where is your flavor?
Oh, wow. That's a very difficult question. I have to say, I started from payments, so that was my PhD. And I'm actually glad you asked this question, because that was my first slide, so I can talk about it a little bit before I jump in.
Well, I'm not going to steal your thunder. I'll hand over to you, and you tell us about what it is that you do. And thank you for joining us. Over to you. I'm going to go off video, unless you want me to be here, because I can always nod encouragingly. But I did have my promised cup of tea delivered, which I'm going to drink now. And we look forward to hearing from you.
Enjoy your tea, Chris. Thanks a lot.
Thank you.
Well, hello, everybody. I'm just going to share my screen right away. So as Chris said, my name is Markos Zachariadis. I'm a professor of Financial Technology and Information Systems at Alliance Manchester Business School. And this was an appointment that came basically last year, towards the end of the year, in November 2019, where I joined the University of Manchester to build together with colleagues, of course, our new FinTech initiative, new FinTech research cluster, let's say. So part of my role has been basically to direct this initiative and try and connect the dots across the entire university and also within academia across the UK to build a comprehensive research and teaching portfolio. And of course, our FinTech kind of a research and teaching strategy going forward. So as Chris said, and just to respond basically to his questions before I started my presentation. So my background is basically, I come from an economics background. I did my PhD at the London School of Economics, looking at the economics of payment networks. So that was my first topic as an academic, to try and understand, for example, the different kind of externalities that are present in large payment infrastructures, or what are the rules of governance, how money move around across the world, looking at international payments specifically, and working with quite a few years with SWIFT, SWIFT International, the large technology, financial telecommunications infrastructure, to understand this movement around the world and the usage of international payments in that context. And from there, obviously, when I graduated, finished my PhD, I moved to different roles, as you can see, in different universities. University of Cambridge, where I'm still a FinTech fellow there, and worked business school, where I also led the development of executive education around digital leadership. And a lot of the research I did was also incorporated into that curriculum around the role of technology in financial services. And arrived now at Manchester, the business school, to basically set up and expand our research beyond obviously payments, which is something that I've been doing also the last kind of 5 years or so. So beyond payments, my research expanded into, as you will see, I'll talk about some of the research projects and the research questions we're asking, but expanded to open banking, cryptocurrencies, blockchain technologies, and so on and so forth. So I'll come to that in a second when I'll present some of the research questions we are asking at the business school and the university, and also in collaboration with other colleagues across academia in the UK and internationally. But before that, let me just spend a couple minutes to talk a little bit about our FinTech initiative at the University of Manchester. So as I said before, part of my role will be to direct these FinTech initiative, which will lead into a new FinTech center, hopefully very shortly. And our mission is twofold, and it's basically funded up until now with a very generous donation that we received last year when I started my appointment at the business school from Greensill Capital. So Lex Greensill, the founder of Greensill Capital, which is one of the, perhaps I think in terms of the size, one of the top 5 unicorns, FinTech unicorns in the UK, they donated £2.5 million to the University of Manchester to basically boost our efforts around FinTech research and teaching. And we're trying to leverage this funding, obviously, to build a comprehensive research and teaching agenda. And our mission, I think, can be described as twofold. So the first thing is to produce cutting-edge research in FinTech that will have an impact on policy and industry. And the second is also to educate the next generation of leaders in financial services that will essentially shape the future of the finance industry. And I think these two are very, very much linked together. So, being an academic, obviously, as Chris said, I spend a lot of my time doing research, academic research, and contributing to science around understanding of how technology changes business models, around the economics of technology, the economics of innovation, how different technologies like network innovations, for example, offer opportunities, or what are the strategies you can build on top of some of the fundamental principles of these technologies, so on and so forth. So doing science first and then educating the public or students and participants in the different programs, we think is very, very important. So teaching for us, being at the university, one of the Russell Group universities in the UK, must always have its foundation in research. And this is, I think, one of the big kind of advantages of actually studying FinTech at this point in time in universities as well. So obviously, to achieve both these kind of elements of our agenda, we have to work very closely in collaboration with practice and industry. And I think the donation from Greensill kind of speaks very much to that as well. Now, to start off, the approach we're taking at the University of Manchester is multidisciplinary, because we think FinTech is a phenomenon. I mean, if you don't want to call it a phenomenon, that's fine, but it's still, for us, is a phenomenon that we study and can be approached through different kind of lenses, right? So you could still study, for example, one technology like artificial intelligence, or perhaps application programming interfaces in the various subsectors within finance. So it could be payments, could be wealth management, insurance, and so on and so forth. But the third dimension for us is the disciplines, right? So you can study, for example, the economics of payments, provided the recent developments in artificial intelligence, or you can try and study the sociological kind of effects of some of the mobile applications in wealth management, which is actually a topic that even one of my undergraduate students actually right now is investigating. Or you can study the computer science side of a particular technology like blockchain, right? What it means to create a new kind of consensus mechanism and how this will impact peer-to-peer, for example, value transfer, and so on and so forth. So this is a strategy basically, is to create this kind of multidisciplinary research approach. And to do that also, we'll have to bring together researchers across different parts of the university. So by any means, I think it's very hard to do fintech research from one particular kind of lens, or looking at one particular kind of phenomenon or discipline within science. So this is our kind of basic principle. And on top of that, obviously, we've executed and we are doing research based on that principle. So as I mentioned before, I started from payments, looking at payment infrastructures and how they're making a difference for different things around the industry and facilitate perhaps international trade. But what are the key characteristics that we need to pay attention to when we put forward payment infrastructures? So for example, you have governance issues, you have standards issues, you have issues around the technology, you have issues around security, and so on and so forth. But also, what is the economic impact? And by that, obviously, we mean, does it add the adoption of such innovations or infrastructures? Does it add any kind of economic benefit to the people who adopt this, to the organizations that adopt these infrastructures? And what are some other economic principles that we can use to understand to understand these benefits and how they kind of materialize, right? So for example, we have network externalities, which is something that really plays a lot and is present in large kind of payments infrastructures and usually any kind of network innovation. So from there, obviously, we expanded a lot. Now there's an open finance. So for us, for example, regulatory frameworks like that, the one of open banking in the UK, and obviously PSD2 across Europe, is a very, very important regulatory development. And we are trying to study the effects of these regulations. So moving from the unbundling of the bank, as a lot of people may have heard, due to the abundance of fintech kind of innovations and activity, into new business models where they can allow banks to act, or other kind of ASPs and financial institutions to act as platforms. And then their strategy or their efforts should be around, for example, how do they rebundle some of these activities and experiences for the consumers? So this is another big research question we are looking into. We already have a paper out 3 years before, in 2017, on the economic effects that play out in these new business models in finance, and we have one more upcoming towards the end of this year. Both of these actually were funded through the Swift Institute. And to an extension, I mean, we hear these days a lot about, the fintech ecosystems, innovation ecosystems in finance. That was another very interesting question for us, because, thinking about ecosystems, the first thing that you realize is that there is interdependencies and different integrations across. So if we are to really leverage these, amazing kind of existence of in the shape of different kind of fintech startups, let's say, and bring them together to create new kinds of value chains in finance. Part of our strategy should be really to try and identify what are the different bottlenecks that, or the different challenges and risks that this and entire kind of symbiotic ecosystem within financial services will function based on, right? So this is another important piece of research that we just submitted in one of the top journals in innovation economics with colleagues from University of Oxford and Warwick Business School as well. And of course, we don't just study the firm level impact of technology in financial services firms, but also the industry level impact of technology. So, for example, one of the first things that we saw was that the introduction, perhaps, of open finance regulatory frameworks, but also technologies like open APIs, they kind of move the industry towards a more modular architecture. And this is, again, based on some research we did. We wrote a paper leveraging theory around modularity in large systems, which is pioneered by people like Baldwin at the University of Harvard, and trying to understand how we're moving from a more kind of vertical way of organizing economic activity in banking to a more kind of modular and distributed way of organizing economic activity. And as you can see, that could mean moving away from a product-centric kind of arrangement that we're used to having in financial services and banking for many, many years into kind of more distributed setup, where we have many different players producing or taking part in the production and the value chain of any given product in finance. Now, of course, one of the things that we do is influence policy and talk to policymakers a lot. And another piece of work I just want to bring to your attention is perhaps trying to understand how do we approach these kind of regulation or initiatives like open banking or open finance, right? So I spent a year, or almost a year, I guess, perhaps an academic year, I should say, in Canada a couple of years ago as a visiting professor at Ivey Business School, trying to identify and provide some recommendations to the government, the central bank, and Payments Canada as well, on how they should approach, introducing open finance in the Canadian market, and what are the themes and the things that they need to consider. Obviously, there's a lot of lessons to be learned from similar initiatives in Europe and the UK as well, but of course they have their own contingencies. The market is quite different there. So spent quite a bit of time speaking to regulators, policymakers, the central bank, and the big and small players and medium players in the market as well. So we came up with different recommendations, but also different ways of creating data sharing infrastructures in finance. So this is another piece of work that went live, let's say was published as part of the Global Risk Institute in Canada. And by all means, feel free to access these open kind of material online and freely available. Another piece of work we are looking at the moment is also obviously blockchain technology and distributed ledger technology, or shared ledger technology based on your definition, and so on and so forth. And one of the key things that we really saw that was really important for the industry and people were really paying attention to was the governance issues around it, right? So are public blockchains, for example, fit for purpose to serve in the form of financial system? And if not, what are the things that prevent their adoption, right? What are their governance arrangements? Are they as decentralized as people think they are, or people say they are, right? So we discussed this in another paper with a professor from the LSE and Garg Kalma, who's also the head of research at blockchain.com, one of the largest wallets globally. And we came up with certain kind of propositions of how governance of distributed ledgers should be approached. This is something that I also had a chance to be invited as an expert to present at the UK Parliament as well, fitting back into the policy discussion. Other pieces of work, and I'm not going to exhaust obviously any of these topics right now, but we're looking at identification infrastructures in financial services. So following MiFID II, legal entity identifiers, again, really important in the context of how do you create a ledger of reference data, for example, of firms that will allow you as a regulator to observe risk and have a better visibility of risk across the economy. And of course, CBDCs is probably the latest thing that I'm doing right now. Again, supported by the Swift Institute. It's a new study that we're launching, and we actually launched with our panel at Cybus just a few weeks ago. And the key question there is to provide a taxonomy, but also understand what will be the impact of CBDCs on international and national payments and the impact on commercial banking business models. Couple more things that I've been doing as part of the World Economic Forum. I should have mentioned that in the beginning. I'm also part of the World Economic Forum's Global Future Council on resilient financial systems, and the work there that we're doing with different colleagues and leaders around the world is to understand how technology again will impact the world of finance. And also one of the pieces that we pushed out before the summer with and Mohit Joshi, who's one of the presidents of Infosys, on the effects of COVID-19 on banking, talking about the new phygital strategies, we named them, rethinking the physical and digital divide, and what that means in terms of the physical assets of banks going forward, like the branches, for example. So I'm going to stop here. This is just a slide with some of the references if you want to take a quick picture of it and follow up on some of the readings that I mentioned during the talk. I'd be more than happy to discuss some of them later offline and online as well as part of our panel.
Thanks, Markos. I think you actually need or deserve some form of BBC program via Charlotte's channel dedicated just entirely to your research, because you've done quite a lot on a lot of different things. I think it's very interesting to see where your thinking has been going. It's very good you've been funded by the Swift Institute as well, because I was around when the Swift Institute was first formed. I think it must be about 5 or 6 years ago now, and they've been very, very good at applying funding and incremental funding into the academic space. And it's also interesting because not many people think about infrastructure as something that's a valid topic for fintech. People want to talk about payments, they want to, but actually the physical or the existential issue around just the infrastructure of fintech in the way that that Swift thinks of it. Yeah, it's very interesting. I don't know many academics that have worked on that. I know there's one professor at Loughborough who works a lot with Swift on that. Do you remember his name at all?
Alistair Milne.
Alistair Milne, that's right. Yeah.
We're co-authoring this new piece in CBDCs together, actually.
Yeah,
so.
he's always been very, very key on that sort of the impact on the economy of that kind of infrastructure. But anyway, so thank you very much indeed. We're going to have you back on the panel in 20 minutes or so. But I'm going to hand over now. I'm going to introduce you to Ian Johnson. Ian Johnson works at Marqeta. He's the European Managing Director. Now, I believe that Marqeta has been around since 2009, 2010, but it currently has 12 offices globally, or 12 in 12 different countries, and it has 2 offices in the UK, one of which has just opened up in Manchester. So with that, I'm going to hand over to Ian. Ian, tell us a bit about Marqeta, please, and thank you for being our sponsor of the conference. It's been great working with you.
Thanks, Chris. Firstly, thank you very much for the invite to speak to Joe and all the team at FinTech North. I'm delighted to sponsor. I'm just going to share my screen and run through a bit of history about Marqeta, what we do in the market, how we see the market, and also why Manchester. So just give me 1 second. Okay. So let's kick off. Firstly, who are Marqeta and what do we do? So we're an organization, as you've already alluded to, that was founded 10 years ago in, actually we were founded in a San Francisco sushi bar, which let's face it, for Bay Area fintechs, where else would you be founded? Actually, like many fintechs, the original idea of why we formed the company was not really where we've ended up. So the original idea was to allow people to put multiple Groupon vouchers onto a single payment card, and then to use that prepaid card to be able to make payments. And really, it was during the process of building that capability, which we did very successfully, and we worked with the likes of Facebook on, that we really identified a much bigger opportunity. And that was born from the frustration that we felt with trying to build a card program working with legacy technology providers. So organizations like First Data and TSYS, who have been very successful processing large volume of transactions with incumbent banks for a very long time, but who don't really have the type of technology and ethos that a Bay Area startup company was looking for. So we decided to pivot, or I should say Jason Gardner, our founder, decided to pivot and really focus on providing the essential tools and infrastructure that would allow similar businesses to Marqeta looking to launch card programs to do it in a much more efficient way. So we've been around for 10 years. We define the category of modern card issuing. We have one single integration for all of our global customers to one single global platform. We are certified by Visa and MasterCard in the US, Canada, in Europe, and also with Visa in Asia Pac. And we're very proud to have issued over 140 million payment cards since our inception. and even more proud of the type of clients that we work with. So the likes of Square, Klarna and Uber, all household names. But also in Europe, Twisto, the Czech credit card company, Lydia, the peer-to-peer app out of France, and Capital and Tap out of the UK, who have really kind of transformed the SME lending space. And as with many successful fintech organizations, one of the key things is about timing. So there have been many great ideas and many great companies with very smart people who have launched businesses that just didn't work out because the timing wasn't quite right. And for Marqeta, when we came up with the idea and launched, we arrived at a perfect storm, really. So the incumbent players were innovating incredibly slowly. After the crash in 2008, fintech was really kind of born and accelerated, and we found investors willing to take risks and invest capital. There were plenty of very smart people with great ideas who wanted to innovate and do something different. And also the nature of IT had changed dramatically. So connectable APIs becoming more and more prevalent, and it just lent itself to an organization like Marqeta transforming how cards are issued. Open APIs are absolutely central to what Marqeta does. So we are an open API company. You can go to our website, you can register for a private sandbox. We'll build that sandbox whilst you're online in the background. And then you can instantly start to use our APIs in the sandbox to start to build and test your ideas. And this is one of the things that we think is most important to the fintech industry generally. Our view has always been that for far too long, technology companies would tell people about their technology through slideware and endless presentations and documentation, but they wouldn't show them the technology. So we have a show not tell mentality. And in order to do that, we're very proud of the tech that we've built. We're very confident in it. So we took a decision to become an open API company without any walls. So you can go to the website, register with an email address. You don't need to speak to anybody. We're not going to assess whether or not we're going to give you access. Anybody and everybody around the world can access the Marqeta platform. And at the heart of that is an open API strategy. But clearly, we're not the only people that are doing that. There are many organizations who've adopted the same approach. And it's the only way that we can really drive digital banking and financial services forward. So organizations in the KYC space, fraud monitoring, open banking, access to improved reporting suites. There's many companies out there that we're all aware of who are really kind of moving the needle by allowing innovators to access their technology and to do that through open APIs. And if we look at how we see the market today, the traditional banks have been around for a very long time. They will continue to be around despite all of the many calls from the fintech industry about the death of the traditional bank. Now, these organizations still hold the vast majority of all deposits, but they've always been challenged from a technology perspective because of the legacy tech stack they have, the complexity of that tech stack, and just how difficult it is to innovate at pace. So we saw the first wave of challenges come to market, the likes of Monzo, Starling, N26, and they really changed how we as consumers thought about banking. They raised the level of expectation about what we should demand from organizations who we trust with our money. And they really drove things forward in a number of different areas that I'll talk about a little later. But as is the nature of any business, it doesn't stand still. So we see two things that are really happening in the marketplace right now. There are the next wave of challenges as we think about them. All across Europe, there is great innovation taking place everywhere, every country that we operate in. And these organizations, the likes of Twisto, Dozens, Lydia, Yapeel, etc., they've learned from the first wave of challenges to see what worked, what didn't work, and they've been able to iterate and evolve their products So they become more and more meaningful and more attractive to people who would traditionally have stuck with their incumbent bank. But I think it's also fair to say that we know firsthand that the incumbent banks are not sitting on their hands. They don't garner as much press as the fintechs do. You know, they're not social media savvy, but in the background, they all have digital innovation groups, and they are all looking at how they address the challenges that have been placed on them by these new tech-focused organizations. And they're all looking to do something different and to digitize, or in many cases, to launch completely new standalone greenfield banks. And they have the money, they have the talent, and they certainly have the ambition to really launch products that will be equally as delightful for consumers and SMEs. It just takes them a whole heap longer to get there because of internal policies and just the very nature of how a bank makes decisions. And in terms of the reason why this is such an interesting marketplace is that in Europe, it's a $3 trillion opportunity across debit card, credit card, and prepaid. You know, the growth of cards continues at pace. There are many other different payment mechanisms that enter the market, but it still remains a preeminent way of being able to pay on a global basis because of the work that the likes of Visa and MasterCard have done in building out truly global networks. So we can expect to see more and more innovation within the financial services space. And when we look at it, we think about a digital battleground that's being fought on 4 main pillars, really. So rapid customer onboarding, a richer core product offering, data and insight, and customer service. So I just want to spend a little bit of time just diving into each one of those. So if you think about rapid customer onboarding, I'm unfortunately old enough to remember the days where you would wait weeks to open a bank account and to receive a physical piece of plastic to be able to go and start spending your money. The challenges have dramatically changed that experience for all of us. We now want simplicity, we want it fast, and we demand it. The challenges drove that change, but one thing that we think is really interesting is the fact that the incumbents have done a good job in many instances of reacting to that. So if we look at the chart, I think it's really interesting to see that Barclays are really there neck and neck in terms of their speeds to be able to fully open a functioning bank account. And we'll see more and more of that type of improvement from the traditional banks. As I said earlier, it just takes longer for them to get there. If we then think about the richer core offering, I'm sure I'm like many people, I watched with some amusement at the fact that initially the challenges were all about a race to have the most features. There was a very open social media spat between Monzo and Revolut about who could ship the most features. But what we're seeing from our customers across Europe and in the US is that the focus on features is starting to change. It's less about the volume and it's much more about delivering value. So we think about it in this way. It's not so much about what we could do, but what we should do. A great example of that is a recent new Marqeta partner in Europe called TimeIt, and they're really shaking up the credit card space with a super smart proposition that combines buy now, pay later, and a revolving credit line, but also with transparency and fairness, where, for example, you only pay interest on each individual purchase and not on your entire balance. So that's an example of organizations being really thoughtful about how they deliver meaningful value and maybe not so much about worrying how many different buttons they can put on their app. And then data and insight. So people talk about data all the time, and we believe that our willingness as consumers and SMEs and corporates to share more data securely, clearly, and for the right purpose drives innovation. The more data that we're willing to share, the more easy it is for our industry to innovate and deliver more value. A great example, and the best example still for me from an open banking perspective, is that it really improves lending decisions. So what we saw in our white paper that we recently launched, Lending 3.0, across the industry and the people we interviewed, was that there is a desire to be more inclusive in the lending space. There are more and more products that are niche, that are addressing pockets of society to try to be fairer in terms of how we lend and try to be more inclusive. Open banking and our willingness to allow people to look at our spending history and our accounts allows for those organizations to make better lending decisions, considerably better than what we saw previously, which would be a flat credit file that was delivered by the likes of Experian, very often wasn't up to date, certainly didn't give any great insights as to who I was as a consumer, how I spent, how likely I was to spend, to pay any money back. So if we can understand more by getting access to more data, it means that all of us in the industry, whether you're providing the essential tools and infrastructure like Marqeta is, or whether you're innovating like an organization such as TimeIt, it allows us to do more and deliver more value. And we're a firm believer that providing that we can show the value and show that we're highly secure, more and more people will be willing to share their data if they believe it delivers value and accelerates innovation. And that's really kind of proven out by the fact that 85% of 18 to 24-year-olds are happy to share their data with third-party aggregators. I mean, that's a huge number, and it's really encouraging for what we can do in FinTech as we move forward. If we come to the fourth pillar and we think about customer service, so I mean, we've all been stuck in a bank queue, and a bank queue could be a physical one, albeit not recently, unfortunately. I'm sure many of us would long to see a bank queue again, but never mind. Or whether it's on the phone, we've all been stuck in queues, and we've all experienced just how horrific it is to waste your time trying to get the most simple of transactions done or the most simple of questions answered. When it comes to transacting with our banks, obviously the advent of mobile banking apps, the challenges have made all of that a lot easier for us to do. However, there's a real evolution and iteration of how customer support takes place when it comes to those questions that you just can't get answered by using the app, and you need somebody or something, some technology to give you the answers to the questions you have. And again, it's open APIs and fintechs specializing in this space and our ability to partner with those fintechs through open APIs, which is really driving a very different experience for us all as consumers or SMEs when we have to ask our financial services provider questions about our accounts that we can't answer or we can't just action through the app. So at Marqeta, we think about our role as being empowering the digital builder. And at the heart of that, as I mentioned earlier, is our private sandbox, our open APIs, and our exhaustive work and investment in ensuring that our developer tools are the very best in the issuing industry. We spend millions of dollars in resource time and investment in technology to try to make it as easy as possible for digital builders to innovate. When we made a decision to become essential tools and infrastructure, we acknowledge the fact that our role is to make it easier for others to innovate. We will innovate in the card issuing space, but our job is to make it easier for other people to innovate in the fintech space. So as I mentioned before, first and foremost, we want to let digital builders test our tech. So we want to show them and not tell them about the tech. We want to allow them to launch products in record time. So you can literally build almost your entire card program on the Marqeta platform without having any conversation with Marqeta and only really have to engage with Marqeta when it comes to the point where you're planning to launch the product, and we need to engage and work with you with Visa and MasterCard to make that a reality. But it's not just about the launch, it's also about what happens next. So how do you iterate the product? One of the most important things for success in the fintech space, as we see it, is your ability to react to consumer input and feedback as to how your product is working, and to take advantage of opportunities that present themselves in the marketplace. Equally, it's about how can you expand into new countries and regions, and do that without the need for Marqeta to establish project teams and have lengthy projects and charge you tens of thousands of pounds to do that. That's not who we are. We want to be in the background, invest in the technology, and give you the tools to allow you to do that yourself. And we've very successfully done that with a number of our European customers to date already, who've both expanded into other European countries without Marqeta's involvement, but are also looking to expand into the US. And again, at the very heart of all of that is an open API approach and a firm belief in that's the way that the industry needs to go. So if I can just finish off with Marqeta in Manchester. So we opened our office in Spinningfields earlier this year. We're all pretty gutted that COVID has kind of really limited our ability to enjoy any meaningful time there. But just as soon as we can get back, we will be back. And the reason that we chose Manchester, there's three key reasons. Firstly, we'd already hired some great people from the northwest of England. So we were based in London, but we cast our net further afield because we know that there are really smart people who live outside of London, who are working in cities like Manchester, like Leeds, like Liverpool, and we didn't want to miss out on that talent. So we already had a nucleus of people in our team that were based in the northwest area. We also love the fact that Manchester is challenging London to be the kind of next epicenter of UK fintech. And culturally, being in Manchester just feels right. Our headquarters is in Oakland, so across the Bay Bridge, we can see shiny San Francisco, where all of the kind of famous fintech companies from America seem to be based. But Oakland is a city that is really reinvigorating itself and reinventing itself and becoming more and more of a hub for tech. We've seen organizations like Square join us in Oakland. And we kind of saw the same thing for Manchester. Manchester has for too long been in the shadow of London from a fintech perspective, but the city has been transformed over the course of the last 10 years. It's got a great infrastructure and educational capability, as Markos just discussed in some detail. And it's got great talent, and it's just a really great place for our people to be. So we were delighted to be able to open the office in Manchester, and we very much look forward to actually being able to go and spend some time in the office. And that's it for me. So thank you.
Thank you, Ian. I've actually got some questions. What I'll do is I'll save them for the panel because I want to draw in some of the stuff we saw from Markos as well. So what I'd like to do is invite our speakers from the previous segments to come back in and join us. So Charlotte, Markos, and we're joined also by James Cliff from Refinitiv. James, can I just ask you to give us a couple of minutes on yourself and Refinitiv to sort of set the scene before we pop into questions, please?
Yeah, thanks. Hi, Chris. It was great listening to Ian and Markos because I've come from that world. I was a career banker with some of the more established banks, and more latterly when I was in banking, I was looking at what does the future of banking look like? How are we working to improve the customer experience and set up some of those standalone initiatives that Ian talked about? While I was doing that, the opportunity came up to join Refinitiv, and Refinitiv is a business you've probably not heard of the name. We are the world's oldest fintech. Our heritage goes back to 1850 when Paul Julius Reuter, you're probably familiar with that name, used carrier pigeons to transmit stock market prices. And our business was actually formed 2 years ago. We were a buyout from Thomson Reuters that was led by Blackstone. We are, as I say, one of the world's largest data businesses, And our aim is to put ourselves at the heart of the ecosystem of the financial markets and financial services with the data that we have. And the amount of data that we have is phenomenal. On our open access platform, we've got 60,000 terabytes of data. Now, for somebody that wasn't from a data background, the best way that was explained to me was, James, if we put that data onto the old CD-ROMs and stack them on top of each other, it would be 857 kilometers high. Now that would, if we knock that over from where I am in York, it would land just south of Paris. And that's what sets us apart. It's the richness, the quality of the data, and it covers all aspects of financial services and financial markets.
Great, thank you, James. Very interesting to have you here, because actually the business that I run looks at a portion of the data that might exist in your world as well. I think you bought eVestment a number of years ago, a couple of years ago, certainly under the Thomson Reuters banner. So eVestment actually did something very similar to what we're doing, albeit with through a slightly different lens. So I kind of get where you're coming from. You're also quite a lot of the news at the moment, because I think there's a potential. I say potential. I mean, there are some hiccups, I think, because it's so. I think it's seen by the competition as so foundational. You may be aligning yourself with the London Stock Exchange. Am I correct?
We are, yes. So we're in the process of being acquired. That deal is scheduled to close early in Q1 next year. It's going through the various global regulatory and competition sign-offs at the moment. But what that will do is, the beauty for us at Refinitiv is the stock exchange is a complementary acquisitor. And what I mean by that is, there's very little crossover in what we do and what they do. And when you look at the combined capabilities of the enlarged group, we can truly be that one-stop shop for anybody connected to financial services, financial markets, that wants data and insight.
And that's what's frightening your competition, obviously. So, quite right. No, I'm not going to push you too much, but I saw the headline today, and I thought, wow, that's a big deal. Very interesting. Look, before we start, there's a note from one of our attendees, Chris Cobb, who's the investment director at Australian Trade and Investment Commission. It was posted on the public channel, but I'll just repeat it here. He's posted his address and contact details. He facilitates communication between fintechs and companies in Australia coming to the UK and startups in the UK that might want to go the other way. So anybody here, because he has to leave, anybody here who would like to learn about the marketplace in Australia, please do contact Chris. Okay, right. So questions. I've got a couple. We've got a couple from the audience, but I'm going to kick off with one because it's something I saw both Ian and Markos sort of touch on or explain in two slightly different ways. Ian, you put up a slide which showed the length of time it takes to onboard, with an HSBC having a very, very dire output there in terms of how many days it takes to onboard a new client. And then the next slide showed the number of applications that have been offered by challenger banks or with organizations as they start to move into this kind of digital environment. And I think you said that there was a tendency in the first instance to try and offer as much diversity of additional service as possible. Did I hear that correctly?
It's actually, it's more the features that are crammed into an app as opposed to necessarily the services.
Okay, right, but there was this kind of this appetite for giving people instead of a simple experience, one that might become relatively complicated. And then I refer to a slide that Markos put up, which showed two versions of the banking industry: the traditional model, the traditional banks, historic banks that did kind of an end-to-end service, vertically integrated, and then the next was the research where you looked at the current environment. Whereas you've got this kind of mosaic where fintechs and other organizations are coming in and nipping in the bud particular services, presumably because banks are expanding their services and picking and complementing or starting to work through an environment which is highly complex. Now, in my world, which is the asset management world, all I know is that multiple layers of intermediation add cost, add complexity, add risk. So what is the third version, the one that's missing? You've got the past, you've got the present, and you've got the next. And I in my mind, I must have misheard Ian, but I appreciate your point of view working with the banking industry. What is the third version? Are we going to go back to vertically integrated banks, which have absorbed fintechs to provide an end-to-end service across a range of products? Or are we still going to have this proliferation, this mosaic of intermediaries, which to me is potentially risky and costly? Either of you, Charlotte, anyone, in fact.
Yeah, I mean, from my perspective, I don't think we're going to go back in time. I think you'll see more and more fintech partnerships, more banks working with specialists who have really kind of not cornered the market, but really kind of innovated with certain capabilities. Because as you move to a more digital banking stack with open APIs and API connectivity, for banks, it's often very much easier and more cost effective to connect to and buy a service from a fintech, which will deliver a much richer experience for their customers than it is to try to do the alternative. So you're right to identify the alternative possibly is to buy the fintech organization. That's one alternative. The other one is to buy it, build it themselves. And frankly, they don't have a great track record of building kind of innovative technology quickly. It's not that they can't do it. I mean, James, be interested in James' viewpoint here coming from the kind of the industry, but it's not they can't do it. It's just they're so constrained by policy and bureaucracy that by the time they decided to do something, somebody's already built it and are on to the third or fourth generation of that particular thing. So I actually don't think it makes it more expensive. It does make it, to a certain degree, from the outside looking in, because you're dealing with third parties, you could argue it's slightly more complex. But if you look underneath the hood of any major bank, there are very often 100 individual systems that are knitted together, and knitted together not with open APIs or modern technology, but literally stuck together with sticky tape by somebody who is about to retire, as an example.
Yeah. And
they can't hire the people out of Manchester University to go and start writing in COBOL, because who the hell wants to write in COBOL?
I completely agree with that. I think we should reflect on that point with James, given the fact that he has to try and cross these multiple systems of data. But before we come to that, Markos, just in terms of your vision of what's the next stage, do you agree with Ian? What's the next wave of bank structure?
Absolutely. I think the point of that graph was essentially that we have new technologies. So APIs these days make these kind of modularization, if you want, or distribution of the industry a lot easier. So you talked about the costs before. I think transaction costs have fallen dramatically in terms of these collaborations and integrations. And you see technologies obviously like in firms like Marqeta functioning at this level, making all these kind of meaningful interconnections, really treating data and the richness of data in the way it should be, and basically facilitating all these new business models and value to come on top of infrastructures such as that. So, but I guess to your point, I do have to say I agree with you to an extent that there are new risks that we have to manage now, right? So interconnectivity across the entire industry, many different layers and levels of the banking architecture, for example, creates new risks that have to be managed. And that was exactly the next slide. In a symbiotic kind of environment where you have different entities, a new part of your strategy would be not to just have control and try and supervise your own context and your organizational kind of activities, for example, but also the ones that you partner with and the partners of your partners and so on and so forth. So you need to have a much bigger vision of where value lies across the entire value chain and where the risks come from. So this is a very important kind of lesson. And I think we have a few examples that we can see how things play out negatively. Like, for example, when Wirecard went down and the regulator very rightly, I think, stopped some of the activities, you see how many other entities were impacted from that, right? And I think the same logic applies to many different things, even situations like COVID or any kind of resilience of systems, either organically because of technological kind of characteristics and features, but also kind of exogenous events that may happen.
We could have a whole session on Wirecard, to be honest, not just in terms of what they did, but in terms of their systemic importance to the German payments industry. But we're not going to go there, because I'm sure Markos could step into their role and take over their job very easily. Charlotte, from your perspective, I mean, you have big banks sitting on your as members and on your board, what are they afraid of? I mean, what do they want? Do they want to remain vertically integrated? Do they embrace this mosaic model? Or is there a third thing that they're after? And how would fintechs interact with that third thing, if indeed it would exist?
I mean, as we all know, the main challenge between any partnership of a bank and a fintech is the procurement process and how long it takes. So a quick no is much better than a slow maybe. I'll call out for banks, but it is the biggest challenge. Banks would love to adopt the technology. As anyone knows who has integrated into a bank's systems, that can take up to 200 systems need to get changed every time you do it. I've been there myself, I've done it. So I think that is the challenge, is as much as their desire is there and they would love to come and do lots of deals with fintechs and bring them into the bank and use their technology, it's unfortunately not as simple. For every one department that wants to do it, there'll be maybe another 20 departments that it's not really their priority list, but they will have to change technology.
So there are architectural reasons why it may not ever happen anyway. So okay,
and the sign-off process and balance sheet issues. Obviously, if they purchase a stake in it, that sits in their balance sheet. That's a real challenge and a drag.
And I completely agree with that. I mean, I understand how difficult it must be for a company that's got 2 years provenance to step into what might be a fundamental role for a large incumbent that has a massive reputational risk that it has to manage. White labeling, is that the way forward? I mean, is there some Uber framework we can have for doing a kind of a due diligence on behalf of banks? I mean, is that the next evolution perhaps?
Yeah, and there have been people trying to look at this fintech pledge that's been launched, of sitting and saying, what's the minimum standard? The problem is that, again, each bank's different to the next bank, so you can't just find one set of standards, unfortunately, and there's firms like Finastra who've been trying to do that. So what you're probably more likely to see across the regulated tech space is more partnerships horizontally. I know the private equity space is, we've seen it before in tech with a roll-up strategy where they put 2 or 3 together, put the package in before they go into the banks. That's certainly going to be there. But
I see that in my world as well. The big ask of private equity at the moment is, how do we put together a coherent all-in-one solution for pension fund consultants or for asset consultants to provide information to their underlying clients, because they see that they can acquire different parts of the supply chain. From your point, James, I mean, you must almost more than anybody here, we all have our own areas of expertise, but you see all the data, right? You see all of it. And how much is that complexity when you're getting data? How much is that complexity slowing things down?
Massively, if you're a legacy bank, and the challenge of operating with legacy systems, Ian talked about it. The knowledge isn't there now in the workplace to re-engineer these systems. They're so old. And what I see banks doing is they're almost trying to strip back their core systems so that they become systems of pure record and build a new layer in the cloud that's containerized, where all the sexy, great customer experience happens. That is really hard to join together, really hard. And the other thing, though, is it's technology, it's culture, and it's risk. And from a culture point of view, I think one thing that often gets overlooked is the senior managers regime that senior bank executives are working under. That if something goes wrong on their watch, they are personally liable. They, handcuffs off to prison. That is what they're up against. So, I hear bank CEOs say it's career suicide to migrate the core banking system. That is a view that's out there. What I think is changing at the moment, though, is that COVID is going to be an accelerator, because bank CEOs across Europe at the moment are ripping up their 5-year strategic plans. They're looking at 3 areas. They're looking at how they can minimize cost, how they can explore growth opportunities, and how they optimize capital. And I think, if I was running a bank at the moment, I would be looking at some of the challenger banks and thinking, that's my vehicle for growth. I should buy one of them and drive all my growth through that new engine.
It's interesting. So the classic model, you've been in the industry as long as I have, right? And the classic model for a fintech was somebody to build one of the homegrown systems that Ian referred to when he spoke earlier. They would build a process internally, or they would understand and learn everything about a process internally for a bank or an asset manager or a consultancy or something, and they would step out and they would start a company that solved just that problem, and then they would be hired back in by the company they'd left. And there are lots of people that I know who became moderately successful and went off to live on yachts in Mallorca as a result of exactly this model. I solved a problem for a big bank. I realized it's a generic problem. I understand it better than anyone. I'm going to go and build something, and then I'm going to go back and sell it to the client base that knows me best. And banks and asset managers have been built up on this plethora of systems. But the difference now is that fintechs are not being built and designed by people like me who might try and do that, who've been in the industry for 20 or 30 years. They're coming from outside the sector. They're coming from people who don't have those history of relationships and don't have that history of understanding, or as I would put it another way, the legacy of that seagull hanging around their neck. They think differently, they think fast. And so the biggest issue is probably going to be, as you mentioned here, cultural. You know, how do you get people who are thinking totally differently about the problem to overcome the hurdle of the SM and CR, so the senior managers and certification regime, which now extends beyond banking and to every other vertical in financial services as well. So what is the answer there? How do we get people who are not only have been taught not to think differently, but have a barrier to thinking differently, to engage with people who instinctively do? Do we have an answer?
I think, when you look at the various stakeholders connected to, financial services, you've got pressure from some customers who want a better customer experience. But ultimately, you're going to get pressure from regulators who want greater resilience in operational systems. And there isn't that resilience in a lot of the legacy systems that are out there. But you're also getting pressure from the shareholder, and the shareholder wants to see growth. And the core banks, the legacy banks, aren't achieving the growth levels.
Okay. I mean, it's interesting. I asked, it was a kind of rhetorical question in a way, because the whole point in FinTech North is to try and provide the environment to enable these two worlds to collide. I mean, Charlotte, from your perspective, let's be honest here. How successful is it to engineer that collision of cultures, that collision of aggression, that collision of the need to change? What is if you like, the catalyst for that? Is it the consumer demand? Is it shareholder demand? Is it regulatory demand? How would you weight those?
I think if you wait for the shareholder demand, you're probably going to be too late. They're going to see it last. It will be consumer demand, and we've seen that in slides on people queuing up for the banks. Why has everyone gone to online banking? Because there was a demand to do that. Yeah. How is SME financing going to potentially explode? Because we're going to see an SME demand for economic recovery. They're not going to potentially get all their loans from a bank. So it's going to be driven by the demand like that. Regulators, in many cases, there's too many regulatory consultations out at the moment. It's really killing everybody across the FS sector, and we have Brexit as well. So it's not for willingness of wanting to do this. It's the fact that there's just a lot of factors stacked against them. However, the rush is there. There's a competitive edge to this. And we're seeing the UK is quite far ahead compared to other parts around the world, who've pushed us back. So don't write off the UK. They've embraced innovation. Maybe it's partnerships, maybe it's investment stakes, maybe it's just referrals out there. I think we're going to see more loose partnerships.
It's interesting.
So they don't have customers, but they can refer them and have a happy customer at the end.
Okay, so you mentioned the regulator, and there's actually a question from the audience here about the regulator, which I'll segue into, but I just want to follow a little thought piece here. Given the fact that there are too many regulatory consultations out there, and they tend to be quite specific, right? So they're part of the problem. They're part of the problem because they're focusing on, instead of the end-to-end, they're focusing on the granular piece. What is the greatest challenge? And this is the question for the audience. What is the greatest challenge facing the regulators? Is it that they need to stop being in the weeds and try and adopt an end-to-end approach? Because in an environment where you have a kind of a highly segmented and a highly fragmented industry, whose responsibility is it to think end-to-end? Right? Somebody's got to. If the banks are disaggregated now into pieces, who's thinking end-to-end? Is it the regulators? And that aside, what is their greatest challenge? How might they respond? I mean, Markos, you, from an academic perspective, what would you say to that?
Yeah, I mean, it's a challenging job, right? Because the regulator wants to ensure that there's stability in the market, but also at the same time have enough competition, right? So these are kind of perhaps the two missions that one can really put in a nutshell, that the role of the regulator of financial services is. And we have seen, for example, I'll bring back the example of open banking. It's really hard to manage the two, because you want this new kind of openness to engage into further competition. But obviously there are certain risks that when you do that, you have to do it in a way that when it's introduced in the industry, they're not kind of secondary or third degree risks that you're introducing, right? And a lot of people, for example, have been speculating on what are the unintended consequences of open banking and what kind of new competition can bring outside, from the industry and into the industry. And a lot of people, I mean, as you probably know already, have been pointing to the big tech firms and how they can move into the financial service industry more swiftly, because now there is this regulatory kind of framework that allows them to do that in a more kind of easier way, let's say, right? Or at least the appetite for interconnectivity is there. So I think it's always difficult to keep a balance. The other thing I wanted to say that complements a little bit what Charlotte said, and pointing to these kind of collaboration between fintechs and banks, I think it's also education is really important there, because it's not just the regulators that need to have this kind of bigger picture, understand end-to-end how financial services kind of work and what are the different risks that they could be introducing with new regulations. It's also the kind of senior executives who make the decisions about the direction and the business models of large organizations, right? And how to navigate all these new regulations and risks from interconnectivity and the new environment that is emerging, and put that into meaningful decision making for the organization. And we have seen that there is a lot of demand for, obviously MSc and postgraduate and undergraduate courses in fintech, but there's also huge demand from executives to really understand not just the trends, but also the economics and strategic implications behind, new regulations and the new kind of emerging landscape of financial services. And that's one of the things I've spent a lot of my time over the last 2-3 years, is basically to really sit down with boards of directors of global banks and kind of in the form of a masterclass or workshop, kind of break down all these threats and new things that are happening and trying to strategize around them, so that they can try and kind of a bit more comprehensive strategy to respond to these threats or opportunities, let's say, right?
Very interesting, thank you. We're coming up to the close of it, because we're going to have a coffee break in a moment or two, but I've got one other question from the audience, and I want to make sure that I give you people in the audience some time. It's actually a very specific question. It's about the trading industry, and I presume you mean the person who's asking it is talking about the sort of equity trading environment, trading on exchange. And the question is, what impact will automation, performance analytics, and things like AI and machine learning have on an environment that historically, or could well have been, certainly in the less liquid space, have been driven through personal relationships? So that's what I'm reading as the question. And I'm guessing here that I think the impact for me, when I look at it, is that actually, is it going to do away with the human factor? James, I mean, this is probably a question that's most readily answered by you. Are you seeing a rapid change or any kind of systemic change in the trading environment as a result of the availability?
Yes, we are. So we provide our data through multiple ways to our clients. Historically, it would have been provided through a desktop terminal that a trader would have sat at. And we have about 500,000 people that take our terminals, but we now have 1 million machines that take a direct feed, and now more and more it's going through APIs, and it's algorithmic trading, and it's not just prices, it's news, it's weather, it's vessel tracking. The trader of today and tomorrow needs to be able to code, put very simply.
Well, what about the sort of less liquid markets? I mean, I can see there can be, in terms of the collation of what might once have been implicit information, tacit information, making it explicit through the use of machine learning, the scraping of non-conforming data, that kind of stuff. Is that having an impact on the trading environment as well? I mean, tacit sources,
Yeah, I mean, it's all kinds of alternative data that people are looking for and making use of, and people want data to create alpha, but there then becomes a timeline on how long that alpha retains value.
And does that democratize the trading environment? I mean, that used to be quite a specialized career, right? I mean, getting in to be a trader was always quite a hard thing to be. I mean, is that accessibility of that information democratizing it?
I think it's traders are now coming from very different backgrounds to where banks would have historically recruited traders and trade them in-house. They're looking for people with software skills.
Cool. Right, we have one final question before the break, and that is a really simple one. Are your slides, who have delivered them, going to be made available to the audience? Are we going to be able to download them? I certainly hope so, because I'd like to look back over Charlotte, Ian and Markos's slides to be able to sort of digest them at my leisure, and I think the audience would as well. So I'm assuming the nods mean yes. Joe, are we going to be able to put those up on the FinTech North website?
Yeah, that's correct, Chris. We'll be sharing the slides and the recording from today's session via our website and across social media as well.
Okay,
there is one more question, Chris. I don't know if you want to ask it quickly.
Where is it? I can't.
Just in the Q&A. I'll read it out if you like. What are the greatest challenges facing regulators?
Oh, that's the one I've done. We've done that one.
All right, apologies. Sorry to kill you.
We did that one earlier. That's okay. Right. So what we're going to do is we're going to have a 15-minute break. I think the panelists, we can dim our cameras and I think actually the panelists are going to drop off, and it's just going to be myself and Julian who will be for the showcase. My role will be to ask the awkward questions should the audience be shy. So I'll try and do my usual trick of thinking up something dreadful to ask panelists. So if you finish early, then be prepared for my questions. Julian will be comparing you though, and it just leaves me to thank all of our panelists. I'm sorry it couldn't be longer, but half an hour we covered a lot of ground. I think it was interesting. Thank you all of you for joining us, and thank you for your support. And I hope to see you soon.
Thanks.
Thanks, Chris.
Bye bye.
Yeah.